Australia's housing markets have hit another milestone, with the Australian Bureau of Statistics telling us the new total value of the housing market, including the fact that the average price around Australia is now over $1 million. We discuss this in detail in today's Property Insider Chat, together with the latest figures on unemployment, migration, and the auction results, which give us a good indication of what's happening on the ground in real estate. If you want to keep up to date with our housing markets, please subscribe to this YouTube channel and click the little bell icon so we can let you know each time a new show comes out. It's been a surprising, lively early winter week in real estate. Despite the chill in the air, there's heat in our housing markets, with auction clearance rates staying robust, buyer sentiment remaining positive, and employment figures continuing to impress. Now, during the week, the Australian Bureau of Statistics reported that Australia's housing market hit another milestone. The total value of all residential real estate across Australia climbed to $11.37 trillion in March 2025. They're the figures that were just reported by the ABS, and that rose almost 6% over the year. Now, the ABS reports average house prices, not median prices like a lot of others do. So by taking the total value of all the properties in Australia and dividing it by the number of properties, they came up with the fact that the average home price in Australia topped $1 million for the first time, landing at $1,002,000. It's a surprising figure. I guess it depends where you sit, with the average home price costing over $1 million feels like a win or a warning. Of course, you can make figures say almost anything. It's worth noting that only New South Wales actually has an average price over $1 million, but because of the proportion of all the properties in New South Wales, that skews the figures. Anyway, no matter how you look at it, it's a good sign for our housing markets. They're still powering ahead. So I'd like to discuss that, plus a few other items in today's news with Australia's leading housing economist, Dr. Andrew Wilson, Chief Economist of My Housing Market. Hi, Andrew.
Yeah, good day, Michael. And it's interesting, that ABS data set. Of course, a couple of years ago, the ABS, which we used to rely on to some degree for house price data, they had that quarterly series which went back many decades, and they decided, I think affordability issues were one of the reasons that they'd no longer publish that. Of course, a lot of their data did come from third parties towards the end of that series. So they used to have their own data sets. So I guess it was a trend that was going to emerge. It was disappointing because it was sort of the umpire's call on house prices. But since then, they've replaced that with the value of houses. And as you said, it's a bit of a convoluted model that they do use. It is seasonally adjusted. But the thing is that it equates with what we see with other data models in terms of period-to-period change. And that's, of course, I guess the most important thing in a sense. Whether it's an average or a median, it's how it's changing from period to period. But we shouldn't be surprised that prices continuing to grow. A bit of a shock if they were going backwards when you're using those sort of global measures. And as you said, New South Wales, Sydney, clearly the most expensive capital city housing market. And no doubt that the strength of that Sydney market continues to push prices upwards. So I don't think $1 million buys you a lot in Sydney anymore.
Okay, well, if we look at the other news that came out, the labour market was holding the line. We've been hearing over the last years about employment figures, some people saying unemployment has to rise. The Reserve Bank's been cautious about what employment figures have shown. But it's also a good indication of how our economy is ticking over, isn't it, Andrew?
Oh, absolutely, Michael. In fact, it's probably the key, in my opinion, the key model for economic performance, economic health, and just continues to keep on keeping on. And we had another 4.1% result over May, which was the same as April. And basically, that's where we've been for the past year. So those that had been predicting a shakeout in the unemployment rate have got it wrong. The Australian economy continues to produce robust data, particularly the labour market. But there were some interesting, when we look a little deeper into the numbers, Michael, there was some interesting data. The number of jobs were actually down 2,000 over the month, and that followed a 60,000 rise over the previous month. So, in fact, I think it was 80,000. So those, and the unemployed numbers were actually down also, following a rise of a couple of thousand the previous month. My point is that it tends to be volatile from month to month, these employed numbers and unemployed numbers. So, again, not question marks, but perhaps a minor query over the nature of some of that data. But of course, that evens out the unemployed number and the jobs number to the unemployment rate. And when we look at that again, a 4.1%. So, and I guess the other important, I know that the other important measure in terms of labour market activity is the participation rate, which measures the proportion of the population or the potential working population that's actually working. And that's still at a near record 67%. So a low unemployment rate, and it is a low unemployment rate, let's be clear, and a high participation rate really just shows that we're able to absorb all those that are basically looking for work in the economy. Queensland had the lowest jobless rate, 3.7%. And of course, those lower interest rates will continue to support a strong labour market. Pocket in people's money, that meant more money in pockets. Got that one right. And that means they can go out and perhaps spend it, and that improves the role of the outcome for businesses, and they need to hire more. So
also keeps the floor under house prices, Andrew. There was talk about mortgage distress. That's a different problem, and there isn't much. But if people have got a job and if they feel secure in their income, firstly, they can pay their mortgage, but secondly, they can make big decisions like moving house or buying an investment.
Yeah, and look, Michael, that's an important point, because if we did start to get a shakeout in the business cycle and unemployment was rising, that would have a material effect on the housing market, because, of course, people start to postpone buying and selling decisions because of concerns over job security. And that's, of course, just a logical result of a shakeout in the labour market. But no sign of that here, Michael. The scare campaign over the US potential tariff policy, has just gone foot.
Yes.
Nowhere. And the labour market in the US is performing similarly quite well, So, I mean, but we speak so much about clickbait here, and it's almost a truism that, you just got to ignore, particularly if you're making property decisions, the type of, I guess, nonsense that we do get in regard to the outlook for the economy from many quarters, and particularly for the housing market. But I think if we look at the unemployment rate, Michael, it's been really steady over the past 12 months in that 4.1% range. And this number is historically low.
Yes.
If we go back to that very strong economic period in the noughties, do we call them the noughties?
I think you're still allowed to.
Yes. It's a similar rate then, when we had a massive mining boom and a very, very strong economy. And our unemployment rate is similar to there, but our participation rate is higher. So actually, we could argue that it's a stronger economy now than what it was during that great mining boom prior to 2010, I'll call it that. Yeah, and when we look at the breakdown of the state performances for unemployment, a mixed bag there. Queensland, the top performer, 3.7%, down from 4% a year ago. Victoria steady at 4.4%. New South Wales up a touch to 4.1%. Also, South Australia up to 4.3%, Western Australia up to 3.9%. So, look, when we average that out, it looks like Queensland's been a key part of that, that holding the unemployment rate at 4.1%.
Well, a lot of the jobs have also been created by the government more than the private sector, but the jobs are there. We're working. Anyone who wants a job can get one. And that's despite, as you said, the high migration numbers, people coming to Australia, and we need those migrants to fill the jobs. But the latest migration figures showed a little bit of an easing. Is this just a blip?
Well, it is interesting, Michael, and we've certainly seen the migration profile tracking backwards over the last 12 months. It is interesting because we know there are government policies that have been enacted to try to take the pressure, particularly off the housing market, particularly off the rental market. And we've had a significant reduction in the number of international students that are being given visas into Australia. And of course, the universities aren't that happy about that, because it's a very strong sector for us, the higher ed sector. And, that significant fall in student numbers, perhaps, and we have seen easing in rental growth, and, that's probably or likely to be a result of that reduction in student numbers coming in over the past 12 months. But the ABS has released its latest figures for migration, and that's for the December quarter. So that's the full year last year, and we can see a big fall over the compared to 2023. the 2024 numbers. In fact, a very sharp decline with the annual data. Of course, we had a trough in migration during COVID 2021, big falls there as our borders were locked, with the exception really of Queensland, which sort of kept on keeping on, driven to a large degree by a surge in interstate migration during that period. So, net migration is now under the 100,000 in all of our states, Michael, over the past year, with the leader being Victoria. But under 100,000 is quite a low annual result for our states. As I said, this is a reflection of policy adjustments. And of course, we're starting to get more of a balance between those coming in and those coming out. But this is net migration.
Yep.
So, quite interesting that even though these numbers are still at the level where we would consider historically appropriate, they're still well below the surge we had when lockdowns finished. When we break down some of the performances by each of the states, net overseas migration, that's the difference between people coming in and leaving Australia. New South Wales still leads. That gap's narrowing a little bit from Victoria, which usually is the key destination for migration, but it is narrowing now. I still expect to see Victoria take the mantle there in terms of the top destination for net international migration. And that, of course, will have a positive impact on its housing market. When we look at interstate migration, interesting that we've seen Victoria, which was starting to pick up. Of course, it had some significant falls in net interstate migration during the COVID period. It's now fallen back below the line with a negative loss in 2024, a loss in 2024 compared to 2023, down by 3,000. Queensland just keeps on keeping on. Another big rise in interstate migration into Queensland over 2024 compared to 2023. And as usual, as we see in all these series going back, New South Wales always has the largest loss of interstate migrants, net interstate migration of all the states. But, Queensland's still strong there. And of course, that's, again, promotes the strength of those Queensland housing markets. I was going to say typically or primarily the southeast Queensland housing markets, but we're seeing strength in all Queensland housing markets, eastern seaboard housing markets at the moment, Michael. So looks like, as usual, Queensland is the place to be in the mindset of a number of migrants.
I just wanted to remind you that this is not specific investment advice because we don't know your personal circumstances, but we're more than happy to have a chat to help you take advantage of the opportunities the current property markets are offering. So why not have an obligation-free chat with one of the wealth strategists at Metropole to discuss your goals, your options, and what you could do. We're much more than just another buyer's agent. We help you safely create intergenerational wealth through strategic property and wealth advice. Remember, property investment's a process, not an event. So you can't just go out and buy any property and hope to be successful. In fact, now more than ever, getting the right advice is critical. So if you're looking to invest in property or buy a home, go to metropole.com.au and organise a time for an obligation-free chat. You're going to find that at Metropole we're big enough to tip the scales in your favour, but still small enough to care. And since we don't have any properties to sell, our advice is independent and unbiased. Yes, it's a great lifestyle, and if you're down south as we are, the weather is a little bit more pleasant up there. Despite the nasty weather, though, people came out to the auctions in Melbourne and Sydney on the weekend. The buyers were out there, put their hands up and bought lots of properties, Andrew.
Yeah, look, we're in the early winter market now, of course. We're just seeing the last gasp of what is notionally still the autumn selling season. That energy works its way through until we do get to really the beginning of July, and that coincides with the beginning of mid-year school holidays, which are starting now this week and next week in most of the states. And that's the sign for that quieter winter market. We've still got a week or so, maybe just 1 week left in terms of that notional autumn selling season, Michael. But, we're still keeping on more positive results for sellers and the Melbourne market. The Melbourne market continues to track above 70% clearance rates, Michael.
Yes.
That's almost just becoming the expected result for Melbourne now on a weekly basis for auction clearance rates. And that's why we're likely to see, particularly for houses, higher prices over June, I would suggest. And we will be releasing, of course, our June house price data over the next week. So look out for that and see if these higher clearance rates in Melbourne have translated into higher prices. So we've only got a week left really of the autumn selling season. Markets will be distracted with school holidays. But of course, that's where we see buyers and sellers start thinking about an end of the year program for either their property to buy or to sell. And that gives us the genesis, if I could say that, for the spring selling season, which will come upon us not too distant future.
The cycle moves on, doesn't it? That's right.
And we've got, lower interest rates and a positive auction market and higher prices as a springboard into spring this year. If I could say that, a springboard into spring.
Yes. It's a cycle that happens. Buyer interest comes first. They're now feeling more confident. As we said, they've got jobs, they've got job security. They feel financially secure because they're not going to get caught out by rising interest rates. So as they go to the auctions where there's a limited number of properties, they bid up, they buy, and then sellers start to get confidence. But that takes a while before they bring their properties onto the market, doesn't it?
Yeah, that's right, Michael. And that's the point. It's a seller's market early in spring and a buyer's market later in spring. And that's, I guess, the cycle of the cycle, if we could say that. But we've got a little way to go before we can start prognosticating on the spring selling season. But it won't be too long away. Let's have a look at the data from last week. Auction numbers down a little bit as we are starting to see the slowdown in the market as we move into the mid-year market, the quieter mid-year market. 725 auctions in Sydney, down from 770 the week before. Clearance rate a little higher in Sydney. Strong clearance rate there, strongest in Sydney for a little while, but Sydney has been tracking in those mid-70s quite consistently over the past month or two, 75.7%, and well ahead, Michael, of the same week last year. Melbourne also down a little bit in terms of listing numbers, but another 70% plus clearance rate for Melbourne. And again, we can see how it continues to track higher than where it was a year ago, which actually was one of its better results a year ago, that's 67%. Brisbane up a little bit, clearance rates also a little bit higher. Perhaps we're seeing Brisbane doesn't tend to have the same sort of slower mid-year market that the southern states do. Maybe it's something to do with the sunshine. I don't know, Michael. But the clearance rate was a little higher at 51.1%. Around about where it was a year ago. Adelaide also had a stronger performance. Perhaps it was about fewer properties being offered. Numbers were down considerably from the week before, 75% clearance rate in Adelaide, which is the highest for some time, and around about where it was a year ago in Adelaide. So maybe that Adelaide market is starting to rebound after a quieter start to this year. And Canberra, not quite as strong as the week before when we were starting to speculate that the Canberra market was reviving, but still a solid result, but certainly not anywhere near the near 70% it recorded the week before. So we continue to wait and watch on the Canberra market. Looking at the trends, the monthly trends for weekly auction clearance rates, we can see Sydney still tracking ahead of where it was a year ago, but that Sydney market remarkably consistent in the mid to low 70s, and that is a good result for sellers generally. The Melbourne charts, the instructive chart we can clearly see how Melbourne has increased this year compared to where it was last year, and considerably higher than where it was at the end of last year. So good results there for Melbourne, and now averaging in the 70s quite consistently going forward over the last couple of months. Brisbane a little higher at the weekend. We know that Brisbane market tracks around about 50%, typically has a different culture in Brisbane to auction marketing compared to the other capital city markets, but you're tracking just under 50% average at the moment, or just 50% over the month. And Adelaide picked up a little bit, but certainly still below where it was in those booming periods a year ago when it was the strongest capital city auction market in the country. And Canberra, they look good, those numbers, and it has been a good June for the Canberra market, tracking around about where it was a year ago, but a little bit of a weaker result last week. So we await to see auction clearance rates above 70% in Canberra. Will that happen anytime soon? Not sure. So if you're looking for those latest weekly auction results, you can get them on my LinkedIn channel, Doc Andrew Wilson at LinkedIn. Every Saturday night around about 6 o'clock, we publish those. And Michael, of course, publishes the full national report on Sundays through his various networks. And that report includes the regional breakdowns for Melbourne and Sydney and the top 10 sales under the hammer for each of the capital cities over the week. So another interesting week in property, Michael. We've got the inflation numbers coming up Well, we've got the house price numbers coming up next week.
Yes.
Very interesting. Will we start to see the May interest rate cut impacting housing markets going forward? But one would anticipate that it'll be another positive result for our housing markets, particularly given how consistently robust the auction clearance rates have been over the past month in most of the capitals.
Well, I look forward to getting your results in a week's time, which means we're going to be halfway through the year. But
Yes.
putting all those things we just discussed together, the big picture remains remarkably supportive for property. Employment strong, demand from immigration is still elevated, even though sure it's dropped a little bit. Listings of properties for sale remain low, while buyer confidence remains strong, and rate relief's on the horizon. There's solid fundamentals, Andrew.
And as you said, Michael, we're still talking interest rate cuts, which is quite remarkable given the strength, the strength of all the leading indicators. But of course, we have issues in terms, not now just the tariff issue from the US, but now we have some significant geopolitical concerns going forward.
Yes.
We have to keep our fingers crossed on that one, Michael.
Look forward to catching up with you next week and seeing how it all plays out. Thank you.